The Central Bank of Eswatini, together with the Monetary Policy Consultative Committee, held a meeting to consider the appropriate monetary policy stance. Following intense discussions, the bank decided to keep the discount rate unchanged at 6.75%. I will now proceed to discuss the factors that the bank and the MPCC considered in coming up with this decision. On the global front, the IMF has marginally revised up the economic growth outlook to 3% for 2025 and 3.1% for 2026. The MPCC noted persistently heightened uncertainty and geopolitical tensions that continue to weigh on global growth prospects. Global headline inflation shows signs to moderating. The IMF expects inflation to average 4.2% for 2025 and 3.6% for 2026. Major central banks have adopted a wait-and-see approach as new waves of tariffs are announced and kept interest rates unchanged. The country's main trading partner and anchor economy, South Africa, reduced the repo rate by 25 basis points yesterday as inflation continued to settle around the new operational target of 3%. Domestically, Eswatini's economy is projected for robust growth in 2025, mainly due to infrastructure projects. Inflation is around 3%. The MPCC also noted that the banking sector remains well capitalized and meets all statutory requirements. Even though credit extended to the private sector remains strong, the MPCC is concerned about a possible liquidity squeeze in the domestic market. The NPL ratio also improved marginally and settled at 7% in June 2025 from 7.2% prior month. The current level of reserves is enough to cover 3 months of imports. The decision taken is to safeguard price and financial stability and the parity of the Lilangeni and the South African rand. The bank will continue to monitor international, regional, and domestic developments that influence the movements of inflation and will act appropriately in line with its mission to foster price and financial stability that is conducive to the economic development in Eswatini.